Today is January 13th, 2025. We have mortgage rates at 7-month highs here in 2025, an inventory update for all of Massachusetts and what's going on with inventory here locally. And the jobs report just came out, driving those rates up, and CPI week, and more to cover on today's quick show. So first off, Seth with Reference Real Estate, thanks for tuning in. And like I said, 7-month highs for interest rates here to kick off 2025. A few things driving that. I just mentioned the jobs report. Now, today's, like I said, January 13th. We do have CPI data coming out this week, which will create significantly more volatility, potentially shooting rates to their highest they've been in over a year, potentially going up maybe half a quarter a point or even more if that data is not good on our January inflation report reporting December's inflation, if you're tracking. So jobs report came out. Basically, a lot of jobs created, and what this means is the economy is not cutting back. A lot of worry about what's going on in the market with the Fed rate cuts, which, back at the last Fed meeting, there was no cut. But however, Jerome Powell, who likes to talk a lot, said that we're likely not going to be cutting rates as fast as we were in 2024 in this year in 2025. So maybe only a few rate cuts. And that's why you saw the mortgage rate market respond negatively to that and drive up mortgage rates pretty aggressively and fairly quickly. There are a handful of Fed meetings throughout the year. One is already here in January. We're not expecting a Fed rate cut, and I think it's a 90% chance that that's just going to stay the same. So the Fed rate cut, as we've covered a zillion times now, is short-term interest rates, credit cards, car loans, etc. We don't expect that moving down anytime soon. Now, every single time he goes on stage, though, or at the podium and chats and says things about potentially housing or maybe inflationary comments that potentially are positive for the mortgage market, we might see a little pickup in those proactively as we head towards maybe what might happen a little bit further down the line. So I know it's convoluted and complicated, but hopefully at this point you're catching up on what's going on with the inflation, the inflationary stuff. So secondly, the job stuff, right? So when we're creating a lot of jobs in the economy, we are under the impression that there's not enough duress in the economy. Now, job loss and unemployment is really what the Fed is looking for as leading indicators that the economy is under duress, and therefore can start to move interest rates further down, knowing that we need to have some loosening in the economy. So that likely not going to happen when you see a jobs report come out that's saying we're creating a lot of jobs, right? So you see that report come out, and that's what drove the mortgage rates here in at least the immediate past, last 10, 15 days, up even more significantly than they were to that now 7-month high at 7.25% for the most qualified buyers, okay? So I want to pivot quickly to it's January. Usually this signals a lot more mortgage application activity, which is not really happening yet. I guess there's only one way to go, which is up with mortgage applications. Mortgage applications is a great leading indicator of buyer activity, and then showings, and then we head towards obviously offers, pendings, etc. I'm going to look up actually some showing data here and see what we can't come up with as well. But what I was going to say about buyers is there's still a ton of loan products out there to get you temporary buy downs, right? So we've discussed in the past a 2-1 buy down, a 1-1 buy down, a 3-1 buy down. If you don't know what I'm talking about, please just leave a comment below. I will link you to another video. I certainly won't attempt to explain it here, but there are seller credits available to temporarily buy down your interest rate, and that just makes home ownership a little bit more affordable here in the short term. If you refinance early, you get all that money towards principal. It's a really, really good option as long as your seller is potentially on board and cooperating with that concession, which likely you're still potentially able to do here as the market is still a little bit slower due to said interest rates and mortgage applications being a little low. So buyers definitely should still be really active right now. you're better off shopping now than you are in March or April. I know all of you think March or April is when the market starts. The spring market has already started, people. I don't care if there's snow on the ground, even though there probably won't be when this video drops. You need to be out there in the market right now making moves before the rest of y'all get out there and end up shopping at the same time, creating more bidding wars, driving prices back up. There's already a limited amount of inventory. Talk to your local agent, shoot us a DM, leave a comment below, and we're happy to try and give you a free strategy session on how to work through this, because there's a lot of good options for you right now. So definitely should still be shopping right now. Let's pivot quickly to inventory. I did want to hit on some things here in Massachusetts inventory-wise. So if you recall from some of our last videos, inventory was up towards the 10,000 level here in the late fall when it came to all homes on the market. We are already down to 3,300 single-family homes in all of Massachusetts, which is obviously significantly lower than 9 or 10,000. It was about 2,900 last year, so we have 14% more inventory than we did a year prior. However, the price point, the average sale price so far already this year, there's just not a lot of home sales yet, but keep it in mind, it's up 12%, right? So we did see some significant appreciation last year in Massachusetts. This is obviously all going to depend locally on towns, cities, counties, yada, yada. Closer to the city, obviously way more expensive, but 12% already this year. And so to see 3,300 homes in the market, we did see that slope off of product hitting the market. People pulling their homes, people selling their homes, people waiting till after the holidays. We see a lot of contracts expire over the new year just because people put that as the date, or that's when they write up a contract, or that's when they key it into the system, and those homes artificially fall off the market, but they're not really off the market. They'll come back here in a couple of weeks. There's a lot of temporarily pulled properties that they do pull for the holidays, so keep that in mind as well. When it comes to condos, we do see more inventory as well. 2,000 units on the market, up 14%. And then from a multifamily, pretty much flat. It's only 4%. There's not a ton of data on that so far. But nice to see, well, not nice to see, inventory back on the decline. I suppose nice to see if you're a seller, not great if you are a buyer. And this is why the market here has never really corrected financially, okay? Everyone keeps saying, oh, the market's going to crash. It's not happening. I can, again, link so many videos to how that's fake news. But the perfect storm for prices going down, which they started to in Q3, is a high amount of inventory. And high here is just pre-pandemic levels. It's not even actually high. We did get to 2 to 3 months to inventory in some markets. Condos specifically really started to get saturated. But then as people cyclically pull these things off the market in Q4, oh, by the way, like a previous video we talked about, one of the slowest transactional times is a presidential election fourth quarter, let alone the fourth quarter. The busiest typically right after inauguration. 2025, Q1, Q2, we do expect transactionally to be significantly higher than Q3, Q4, 2024. Still probably more of the same market-wise. If you're an agent, a home seller, or a buyer, the last 24 months as we head into 2025. But what keeps those prices always on the climb is the fact that these homes, by the time property actually hit the market and you start to have a decent amount of inventory where the buyer can be a little bit more picky or start to negotiate a little bit more, get more contingencies, is when you have 3+ months of inventory or 2+ months of inventory here is definitely refreshing. But typically we don't see that. And so to go from a total of 10,000 homes for sale in Massachusetts, already down, let me just pull all of them real quick, all the way down to 6,000. I mean, that's a significant decrease in inventory, right? So, and I know I've run this before, but if you start looking at how many of those are what we'll call affordable homes, like if I just drop the line at 800,000, it cuts the single family mark, meaning 800,000 and below, from 3,500 to 1,400 homes. And if you start to search these by counties, which is local to the city, let's see here. At all towns, 155 homes here in Essex County, all over $800,000. Let's see here. And if I slap 2,000 homes under $800,000, like I just said, 129 under $800,000. That's Essex County. If I go to Suffolk County, again, more of the city, so we have to understand that data is going to be fairly interesting. So that's most of Boston. Only 32 homes under 800,000. And if we go to Plymouth County real quick, we see that there's 240 homes under 800,000. And we'll just check Middlesex real quick, which is usually a little bit of the pricier one. Some of the nicer towns here, 134 homes. So, this 3,000 home inventory, when we talk specifically really close to Boston, I guess I'll do Norfolk County real quick too. When we start talking specifically close to Boston, there's just not a lot of homes available. And I bet you if I drilled that down, 800,000, it's tough to call that an affordable home. That's a pretty large mortgage. So, just keep in mind, that's what keeps these prices not artificially. They're high because there's just significant lack of inventory. So a couple things just here to wrap. So jobs report not good, and that drove our mortgage rates up. We do have CPI coming out here this week on I believe it's the 15th, and that's the inflation data. If that is good, meaning inflation is under control, you might see some relief in rates, and hopefully we'll find our way back towards 7, below 7 here steadily. If that's not good, then I expect rates to move on up, unfortunately, and they're going to be taking the escalator or the elevator. They're going to go up pretty fast here. And if you're a buyer, be in the market. Be in the market right now. It doesn't matter that rates are high. I know it's easy for me to say that, but there's a lot of products that you can get a temporarily lower mortgage rate for at least year 1, 2, or 3 to get in now before prices continue to go up, because they are going to continue to go up. And talk to your local professional about any of that. And inventory likely will be on the decline here until we start to see an uptick, where we usually peak in the spring inventory at a high point between March and April. And that's all going to depend on weather and obviously rates a little bit too. So hopefully all of this information was helpful, and we'll see you in the next video.